on L&T right now, and that seems to be buy on Kunal's radar. But Dinshaw Irani is here. Dinshaw, hi, morning. Great to be having you on the show. And Dinshaw, what the secondary market is doing is one thing. What's happening in the IPO market is catching everyone's frenzy. And even with all that talk around high valuations, I mean, look at Lenskart. It got fully subscribed on day one itself. What's your house call on Lenskart?
Okay, Aisha, very good morning and very good morning to your viewers and the team, and thank you for having me in the show. About Lenskart, actually we didn't go in for the IPO, neither did we go for the anchor. The call was that when you were having such high valuations, you need to see exponential growth also happening, right? And that wasn't visible in this particular company. I don't take a call on valuations, but the fact was that 40% of the business comes from overseas, which is going to grow at low single digits, and 60% is domestic. How far can you grow the domestic business to overcome that tepid growth from overseas, right? So that's why we stayed away, and I don't know whether we're right or wrong, I don't know, but the fact is that when you're giving those kind of multiples, you better have these huge growths to, at least get those multiples in line in the next couple of years, which visibility we didn't have, so we avoided.
Right. Makes sense. But Dinshaw, markets always chase profit pools. So where is it that you are seeing that growth pool, at least so far, this earnings?
So as I said, that exponential is what we look at. And if I remember Sam Altman's statement, trust the exponential. I think that is what we're doing in our platform companies. And that is what the whole, where the actual growth is. I mean, that is where you see these, exponential growths quarter on quarter happening. And we stick to those as such. In fact, whenever there's a correction, we keep adding to those names. Whenever there's fresh flows, we keep adding to those names. So we're quite comfortable with those. And I think that's where the real growth is coming from. And second big pool, which is right now taken a back seat, and that is basically BFSI, banking to be more specific. In banking space, with these kind of massive cuts in CRR, one has seen NIM compressions happening. But the banks have managed it very well. In fact, this quarter, we were expecting massive cuts in NIMs, but they managed it very well, looking at how they balance both the liability and the asset side. I think that will continue going forward, and we are very comfortable with that per se. So these are the two majors, and obviously our hospitals and hospitality. These are the two other major sectors where we are totally comfortable, and I think where the growth is going to be again fairly good.
Okay, so that's your take on the spaces that you're liking at the moment. But Dinshaw, hi, morning. You did speak about platform companies, and I'm intrigued to know your opinion on Zomato versus Swiggy. Now that both those earnings are out, Zomato mix, Swiggy slightly weak. Where are you placing your bets?
So, okay, the fact is that there's no... Both are equal. I mean, both are equal as in we like both the companies. Obviously, we like Eternal more than we like Swiggy because of the way he's gone about approaching the competition. But don't forget that even China has two-player market, Pinduoduo and Meituan. Meituan is a major there, and Pinduoduo is the other guy who is the smaller player there. But the fact is that there's enough potential in this market. In food delivery, obviously, it's going to be a two-player market, and both these guys have been around. Right, for a while, and they've proven their mettle. In fact, no other player has been even coming about in the food delivery. But in the quick commerce space, you're seeing a lot of competition coming in. But please notice that the quick commerce, where the competition is coming in, they don't have a food delivery business to offset the losses that they're incurring in that and constantly raising money in that particular area. So that's why we'll stick to these two. However, as I said, that our favorite is Eternal. Swiggy will always be on the back burner for us, but we're comfortable with both as of now.
But Dinshaw, Eternal was great at the 40, 50 odd share price that you discovered it at and put in money there. Well, what about the current valuations? I mean, for those who are looking to maybe add positions or even buy afresh, is this the right price?
So, Aisha, I'm not recommending anything, but as I said that we constantly keep adding. Whenever we see some small correction also, we add to that particular name. And we see whenever we see fresh flows, we add to that name because we want to keep the weightages of where they are, where we are in the eternal as such. So that's why, but this is no recommendation to buy or sell, but we always have, when you develop a portfolio, you develop you try to run a marathon in a relay fashion where you're trying to see that one set of leaders is in place when the other set of leaders tire out. I think that's how you develop a portfolio, and that's what we're doing with our portfolio as such. So I'll leave it here.
Right, okay. And Dinshaw, last time we interacted, I believe you were slightly negative on IT. Now, given the way IT earnings have panned out so far, do you believe it's now a good time to relook at IT, or do you continue to be slightly negative?
Well, you're being very polite by saying slightly negative. I don't think you were slightly negative. You were very negative on IT, and we continue to be very negative on IT because we believe that, frankly, I mean, what are we talking about here? A growth rate of mid-single digits with Ps of mid-20s. I don't think that's exciting at all. I mean, India GDP is going to grow in low double digits. I mean, I'm talking about nominal terms, right? So where is the excitement in this particular sector? And secondly, as we've always been stating, that AI, we believe, will be a big disruptor out here. The whole equation that we've been following for the past 3.5 decades, that has come up for question with AI in place as such. And I think we need a reset there. And probably that reset, I don't think will be a very happy reset. It will be a painful one as the reset progresses. After that, probably we'll look at that sector, not before that.
Dinshaw, when you talk about BFSI, of course, you know, that's literally one of the core portfolio sectors. But having said that, this entire shift that's taking place because of the valuation catch-up, the kind of, you know, growth trajectory one can see, is the PSUs are the ones which are finding favor. Do you think it makes sense to actually reduce now on the private banking pack, or maybe exit as a tactical play and go in all through for PSBs? Or would you say, you know, both will move in tandem with each other?
So, Aisha, we've always been fairly neutral. I mean, always in the past couple of years, we've been very neutral, whether it's a PSB or a private sector. But the fact is, bank, that is I'm talking about. But the fact is that most of the PSBs are not as consumer facing as the private sector is. The only public sector bank which is fairly consumer focused is probably SBI, and that is what we own in our portfolio. In fact, it's in our top 10 holdings as such. And the fact is that with consumption growing, that is where you want to be, right? And with this government, I mean, with the government saying that, okay, we have been easing out the holdings for FIIs, I think that's more of a FPIs rather. That's more of a move towards increasing our weights in the MSCI India EM index rather than anything else, because this is what will help in moving the weights up per se. And I don't think privatization is the way forward for the PSBs. If that was the case, the government would have looked at consolidation within the PSBs. So I think that is what you're supposed to look at. Asset quality is paramount, and that's what we keep looking at when we look at our PSB sector, because price to book is always very cheap, but you're never very sure about how the book will pan out. So that's why we are very careful on the asset quality as such.
Okay, so that's on PSU banks and banking, and of course PSU banks has been the top sectoral gainer on a year-to-date basis, but Dinshaw, at number 2 comes metals, and I'm not seeing a lot of metal names in the portfolio. What is your exposure to metals right now? How are you placed there, if at all?
So actually we always avoid cyclical sectors, and especially commodities where the cyclicality is fairly enhanced as such, because you cannot time your entry and exit on a regular basis, and that's a major headache we try to avoid as such. I think that's why we are away from metals. Having said that, look at the ferrous space. I mean, if China becomes aggressive in that space, God help the whole sector, because China controls 50% of the world capacity, per se. So these are major things. So maybe non-ferrous probably will be more comfortable with than ferrous, because non-ferrous will more or less go into new technologies which are coming by. But on the ferrous part, we are fairly staying away from that. So,
okay, makes sense. Dinshaw, as always, great to have you on the show, and good to chat with you.
Thank you, Aisha.
Okay, let me just